I think in learning day trading, penny stocks can be super enticing for that lower priced account to begin with. But bottom line, I think people need to learn and paper trade first. See if that's going to work for you. If it's not going to work for you, that doesn't mean quit on trading. It just means find the strategy that's going to work best for you. Because that didn't work, that's okay. There's so many other ways to make money in the market, and there's billions of dollars there. So it's okay. Just paper trade first and see if it works for you.
Welcome back to the Steady Trade Podcast, everyone. Got the whole team back together today. We got Kim, Steven, and me as well, and have a guest that we wanted on for quite some time. I met Jane, actually we were bantering earlier. I think it was 3 or 4 years ago, roughly. Met her at one of Timothy Sykes' conferences when she had kind of first broke out, as I believe, maybe my timeline's right, but she kind of really broke out into profitability. And the funny thing was, I got a selfie with her, but it's a 3-day conference. I never had an opportunity to actually have a conversation with her because everyone wanted to talk to Jane, especially, there aren't many female day traders out there. Well, at least I'm sure there are, but not many that are out there on social media that you can actually find. And I mean, again, it was a 3-day conference. I never had a chance to actually even have a conversation with her. And, she's continuing to trade, now 3-4 years on, and, has a book out there. And, as we brought Kim on the podcast, one of the biggest reasons, I wanted to bring Kim on is she talks about, a lot of the, not only just the emotional side of things, but just also kind of like this different viewpoint versus the stereotypical, bearded, meathead alpha male that, might resemble someone that hosts this podcast, and I think it would be an exciting thing to just kind of get a different point of view. So would like to welcome Jane Gallina, also known as Airplane Jane out there. And welcome, Jane. Welcome to the podcast.
Thank you, Tim. It's great to connect with you. Yeah, it's been about 4 years. It was 4 years ago that I was pregnant down in Orlando, and Zika was going on at the time, so I couldn't go outside for the cocktail hour. So I was hanging out by the bathroom.
Okay. And that explains it. Okay, I had forgotten about that. Yeah.
Wow. That's amazing.
So, I mean, again, if you're
forgot about Zika.
Yeah, if you're just not, we won't spend too much time on this, but if you haven't followed, pandemics, which I'm sure most people do now, but Zika was a scary one, especially if you were pregnant, because it was, affecting, in vitro children at the point. Yeah. So wow, okay, well that explains why. I thought maybe you were ducking me. I didn't know.
Nothing personal, I promise.
How did you come up with Airplane Jane? How'd you get that name, Jane?
Well, Kim, I have been in aviation since 1996. I started working at my godfather's airline, Maryland Air, back in Easton, Maryland. And I was working there, and when I was working behind the desk, I got bored and I picked up a little private pilot study manual and started studying and got my license 3 months later in September of 1996. So I'm actually a pilot. I'm not current, but I have had my private pilot's license since 1996.
Wow, that is a great name then for you, Airplane Jane. I love that. And did you like to fly? Do you find there's similarities between flying and trading?
Oh, definitely. There are a lot of similarities, especially with instrument training. I'm an instrument trained pilot. So you have your scan. So you get used to seeing a certain scan, and it comes in very handy with trading. You're able to watch multiple charts very easily. If you go to a website for certain content or information, immediately you know right where to look, and your brain is just trained to look there. Much like when people first learn how to use a broker's platform, or a charting platform, it takes that time to get to know it. But then once you have it down, it becomes second nature and you just go right to it. So it's the same sort of thing. Once you learn it, it's much easier.
Wow.
Yeah, and it's funny how you know that's an interesting analogy, because it's like you just fall in love with a platform. I know a lot of people that, you know, even as platforms don't update and stuff, you know, they're still using them because, again, you're used to reading your instruments, and that's your instruments, you know, that you like to see, and then you look at charting different color, different style, and it just doesn't jive with what you're looking for.
Wow.
Definitely. And also, I continued into aviation and worked in the Philadelphia at US Airways as a customer service agent. So I continued in that aviation field, and I held that job as I immigrated to Canada after meeting my husband. And it was my second layoff in life that actually brought me back to trading. My first layoff took me out of the trading world. It was back in 2000. It was the .com bubble, and everything. I was working in the Solomon Smith Barney office and saw the WorldCom options that people had, and they'd margined out against them and they hadn't paid it back. And I thought, you know what? Sayonara. I do not want to work with other people's money. So I'm going to take this voluntary layoff and I'm going to culinary school in Europe.
Wow.
Okay, so we've gone from pilot to customer service to working in a brokerage house to now a culinary chef. So, I mean, it's like talk about a polymath for sure. So,
Wow, Jake.
now, what first brought you to Solomon? So what first brought you to finance?
Originally, I was an international business degree major, and I grew up in Washington, D.C., but I went to school in Memphis. So very small town compared to D.C. That was my comfort zone, that bigger, energy of a bigger bustling city. And so I thought, you know what? First job out of college was in the bank. And I thought, you know what? I love the finance world, but I don't want to be in Memphis. So I picked up and I moved to Atlanta. I'm a go-getter. I set my mind to something and I go ahead and I do it. And so then I went to Atlanta, and who was hiring at the time? Brokerage firms with pretty good salaries. And so I thought, I've got the experience. I've got customer service. Hey, this is great. I'm going to go ahead and do this. And I got my Series 7, and I was a registered assistant to 4 different brokers.
Oh, wow. Okay.
Wow.
Yeah.
Wow.
And then everything happened, like I said, with the .com bubble. And I thought I had the opportunity to partner with a broker of 25 years and take over his book, or culinary school in Europe.
Culinary school in Europe. That would win for me too. So what? Tell us. You're doing culinary school in Europe. Are you considering maybe becoming a chef, or is that going to be your path? What happens when you realize finance was still calling you?
Yeah, well, what happened was I went down the path of the culinary world. I worked in the front of the house. I worked in the back of the house. I had my own wholesale pastry business. And in having your own wholesale pastry business, you have to worry about health insurance, right? As a small business owner. Well, what did I do? I got a union job where that health insurance is cheap, and I could travel the world with the airlines, right? So it was a blessing because I could dump my shifts and I could still travel the world, and I had health insurance, right?
Wow.
So a lot of what I've done in life is I've paid myself to be educated. I worked in banking, I worked in insurance, I worked all sorts of different hats that I wore. And it ended up that was great. Then I also fell in love with real estate. After my business was doing really well and it was a point of expanding and hiring other people. At that point in time, I was married and my husband was my partner, and he did not help me so much with the business. It was all on my shoulders, and it was just too much. It was at a growth point, and I decided to shut it down instead of expand, and went into real estate, which I loved as well, and mortgages. And then ended up meeting my now husband when I was working at the airlines. He's a pilot, and he was living in Montreal. So that brought me up to Montreal. And I continued in aviation up here, had a job right as I crossed the border, which was great. Then I found that I got pregnant. And it was my second layoff, 8 months pregnant, that brought me back to the financial world. And it was because I really wanted to be able to provide for my family. And I'd had some great trades where they were value trades, not so much day trading. I never really learned about day trading. It was always that value investor viewpoint. And that's how I found Timothy Sykes with penny stocks and learning how to day trade. And I'm always very thankful for all of his tools and instruments, because that was really my footing and how I started. It wasn't ultimately my path to be a penny stock trader, but it taught me the basics to go ahead and progress forward and find that strategy that worked for me.
I'll just jump in because I've gone through a similar path to you as well. I remember I started in penny stocks and I just thought this is impossible. And then I went up to the higher price stocks and I thought I don't have the discipline to because when they break the support and resistance, I just can't let it go. And then I went back down to penny stocks and it worked. And then I've since been running well and I somehow got it. But what was your journey to learning penny stocks? Did it ever click? Does it click now? Do the same principles apply to higher stocks and lower stocks? Or are you just, because I see your tickers, I see you're trading Tesla and stuff like that.
For sure. Well, you know what? I think the basics do apply, but in my opinion, you're going to find more trader-driven manipulation with the lower penny stocks, and with the large cap stocks, you're looking at dark pool manipulation. Trump even tweeted about it today. Trump was saying, wow, hey, you know what? When these big guys are saying that the market's going to go down, and yet you see that the market's going up, they're making money going against what they're
sorry,
saying.
I'll let you finish that point, but Kim is friends with Bill Ackman, and I mean, we had a perfect example of that a month ago. Here Ackman goes on CNBC, scares the shit out of everybody that the world's going to end. Meanwhile, he's got his boys back in the office covering everything. And then a week later, he's like, oh, hey, maybe it's not that bad.
Yeah. And also the media plays a big role in the large cap stocks. Today, for example, we had Powell talking. All of a sudden, we're in the worst recession since World War II, right? And many times that will go ahead, that will drop the market. Then Trump's coming out, hey, the market, maybe the market's going to go up in his tweets. Sure enough, the market bounced. And sometimes you can somewhat see the reverse psychology in the news. If somebody wants to sell 1 million shares of Apple, what do they need the general public to do? Convince them to buy it, right? Vice versa. If they want to go ahead and buy 1 million shares, oh my gosh, the world's coming to an end. Apple's going to go bankrupt. Everybody sell your shares, right?
Yep. Because China demand's going to zero. They're not going to be able to ship the phones, et cetera, et cetera. Yep.
Exactly. So there's always manipulation, I believe, in the market, one way or the other. To answer your question, I got a little off topic there, is that with penny stocks, for sure, you've got your support, your resistance. I found that risk management, which is number one for a trader, right? That when you look at trading a large cap stock, if you have something that's trading $50 a share a day, and you have 2 shares and it goes down $2, well, you know what? You've lost $2. If you are trading a penny stock and you still want to make that $100, but you have to buy 200 shares of it, then if it's fluctuating 10 cents, you're down $20, right? So it was looking at the risk management standpoint that if you have a higher price stock that has a higher range throughout the day, your position and risk with that position size can actually be less in trading a higher price stock, but your reward could be greater.
Yeah, I call it the rule of 10. I talk about that all the time because, again, I'm mostly a penny stock guy, but I'm not afraid of, an NVAX or an mRNA, $40, $50, $60 stocks. And, when you've got an NVAX, yesterday it had $18, $20 worth of range. I mean, even if you're a small trader, you had 100 shares of NVAX, and let's say you take $10 of that $20 move. I mean, that's pretty good if you got a couple $1,000 account. So yeah, that's something I it's one thing that kind of bugs me at times when people are like, well, you can't trade low price stocks with a small account. You can if you trade the right ones, don't trade sideways stocks, so.
Wow.
And also get to know the personality of the stocks. Like some people will only, I work in trading room as well, where there's one guy and he loves Tesla. Why? Because it has that amazing range throughout the day. And so he's like, I'm going to trade the Tesla, the shop, not so much Amazon. He doesn't like Amazon, but Tesla and shop are his favorites. And that's what he trades because he's gotten to know the personality. He knows on the charts, the resistance, the support areas, and it's easy because he's learned the personality of that stock.
And that's something you can't do with penny stocks because, you can look for the patterns with penny stocks, but when it comes to a specific ticker, I totally agree with you. I mean, you can trade Tesla every day if you wanted, where penny stocks, they spike one day, they die the next day, and they never come back for 5 years. So now you can look at the patterns, but I 100% agree. That's what's great about the Teslas and the Shopify's is that if that's just your go-to and you know how it moves and when it moves, you can trade Tesla every day. It has $100, sometimes has more than $100 a range.
And what is this style, Tim and Jane and Stephen, called? This style that Jane you're doing. What is it? What would you describe it as to me, who's still learning the terms?
Well, I wouldn't necessarily call it a particular style. I mean, I think that with every trader, they are going to have to go through a journey to determine what risk management works for them, what position sizing works for them, what capital can work for them. There's so many different ways to trade the market. It also depends on how much time you have in front of the computer. Are you going to swing it overnight, or does that make you feel uncomfortable where you can't sleep at night? Are you just going to trade the first hour and a half of the day with the most volume and you're great at that? It's going with your strengths as far as what are you good at? Paper trading. I'm a huge advocate of paper trading right off the bat, because if people can't prove it on paper first, they're going to just lose money, right? So yes, there's the psychological aspect of going from paper money to real money, but it can really help you determine your strategy that's going to work for you. And you can say, okay, great. Well, you know what? I love trading options on large cap stocks and taking 100% ROI and being done for the day. You can do that. Or it could be that you want to trade penny stocks on the way up, low floats, short squeezes, where tracking the short volume. You have to figure it out for yourself, I think.
Okay.
I just want to ask something, because I know it's a question that all of the audience are going to want to ask. So with penny stocks, for me, it's super simple. It's like baking bread by this point. Not that I'm good at baking bread, but you have a stock 3 big green days up, then it gaps down, the volume's faded. Like, it's a bad company fundamentally anyway. Everyone knows it's going down. It's as good as done. For your strategy, I can build a case. Tim always builds cases. I mean, I can build maybe 2 levels to it. I'd love you to elaborate on 3 or 4 levels. I can guess it's obviously support and resistance at high volume levels. I can guess if you're going long, you're looking for stocks that can run multiple days. If you're looking for shorts, you're looking for a key support level to break down. But can you add extra levels so we can learn the big stocks and how to trade them?
Yeah, for sure. Well, one of the key edges that I use is when I went back to my book, right? I wrote my book. It's all about female day traders. And in the book, I interviewed Stephanie Kammerman, who is known as the Stock Whisperer. And now I work with her in one of the training rooms there called the Training Pit. And we trade around the dark pool. So we definitely have an edge. Like we were talking about that manipulation earlier. We see those prints come in. We saw the massive 9 million prints on Wells Fargo. When it went below a resistance or a support level, hey, you have 9 million shares above you. You've got billions of dollars that are moving it. They're not necessarily looking for a 20, 50 cent move. They're looking for the big move that happened back in February all the way down to March. We saw that happen. Right now, amazing day, loving today. Yesterday in the room, 10 o'clock in the morning, I said, hey guys, put on your seatbelts. The market's going down. Why? Studying the market, also using different consolidation patterns, to see where that support and resistance is, where is that volume coming in on the daily candlesticks as well. If you look back over the past 2 weeks, you'll see, all right, every time we hit 293 or we also hit the 200 EMA, we had higher volume days. What does that tell you? There's more volume getting in at the top. Where are they likely going to take it, right? And then we start to see these dark pool prints coming in. Hey, on Friday, we had dark pool prints coming in at 292.62, right? Then, actually it was Monday they came in there, sorry. Then yesterday, what was our resistance for the day? Pretty much 292.67. It was confirmation that when you have millions of prints on the SPY, you start to see prints coming in on the majors like Microsoft and Apple, and they all happen to be at the top, and we're going below them, and these are real-time prints that are coming in, potentially millions of shares. It makes it easier to go ahead and say, all right, these big guys are above us. What does that mean? What do you think that means?
To be honest, you said that very eloquently. I'm going to be the first to admit that some of it went over my head, but I'm going to trust. I'm going to trust, because with penny stocks, I mean, I know with penny stocks as well, I can explain a lot of things to people who don't have as many years in the game, and it just goes over their head. And you're like, well, it's so simple. For you, Jane, is it for you once you've got your head around it and once you've been doing it a couple of years, is it like literally autopilot?
Yeah. For sure. And that's the way that trading really should be. It should be emotionless.
Yep.
You are trading against computers for the most part, right? As a retail trader, we're trading against computers. Do computers have emotions? No, they don't. So we need to go ahead and say, all right, I've got to look at the chart. Tune out the news. I don't watch the news. Yes, I saw the tweet this morning because I happened to be in the room and we have news that comes across, but that was just ironic that as soon as he puts it out, then the market's also bouncing. You know, I think there's timing and signals that he sends, but that's my personal opinion. And when you start to see these prints and you have confidence, you know, you're talking about millions of dollars, billions of dollars, and it goes below that, they were likely selling.
Right.
And when they're likely selling, you can probably see a large $5, $10, $20 move sometimes. We're at a point where Powell came out again and said, hey, this is the biggest recession since World War II. That was coincidentally timed after we saw massive prints coming out yesterday.
Now,
right?
I know the first question the listeners are going to ask. So you know, explain what you're looking at. What tools are you when you mention these, you know, dark pool prints, these big prints? What are you using? How are you seeing these? Because I'm sure that's going to be number one question from that.
Yeah, for sure. Well, there are lots of block print scanners, right? So you can go ahead and set up these block print scanners to scan over 1 million shares. And it's going to go ahead and it's going to spit out, hey, there was 1 million shares of, just an example.
Now feel free to mention tools. You know, I know we work for StocksToTrade, but feel free to throw out tools if you.
Yeah, well, I mean, we use Charles Schwab.
Okay.
For finding out those block trades, but that's not the only one. I mean, Fidelity also has it. NASDAQ Book Viewer has it. There's a lot of different ways to go ahead and see it. And not one necessarily is better than the other, because being someone that's outside of the US now, not everybody has access to it. And I'm sure that your audience is global. So you can, as there is a block indicator, like Trade Ideas also has a block indicator. StocksToTrade has a block indicator. Scans has a block trade indicator. So when you set up those scans accordingly, you can start to see these and you can start to study them. And you can say, all right, well, hey, here's 1 million shares. Okay, let me give it a day or two because maybe they're not done. For example, the Wells Fargo trade had 3 to 4 days of prints. The longer the time frame for them to get into it, the bigger their position. The more likely, the bigger the move that will happen, right? So if you'd had, you know, a trade that came in on Novavax this morning and it happened to be at open and it was below it the rest of the day, likely somebody's selling. You know, it's that easy. Or vice versa. Maybe you have someone and I don't know, let me see, there's like maybe we're looking at Beyond Meat, right? maybe everything's down.
Yeah.
JD. Okay,
Not
JD is
the
up.
best day
That was
out
on my
there,
list today. So JD is up, right? So maybe there was a block trade right at open at $48. And guess what? They took it up, they took it down. Why? Why would they possibly take it down? Because they might want to enter even more, right?
Yeah.
So they're going to see how low they can get into it before they take it up. Or vice versa. If they're trying to sell it, they might bounce it higher, like this morning, the dead cat bounce. It's always going to have that drop down, retracement, selling, and then further execution to the downside.
Now I know you're a little short on time, but we'll do one question from each of us, and this is my question that as we move through this. So, do you think, and you mentioned your journey kind of all around the world and all these different styles, do you think? 90% of our listeners are penny stockers. Okay, they're here because they want to trade, they want to start out with low price stocks. Do you think that's the best way to get started? It's kind of, I know you started way before, but you kind of then segued back in to the penny stock world, and then from there, do you think it's best to get started in penny stocks?
I think in learning day trading, penny stocks can be super enticing for that lower priced account to begin with. But bottom line, I think people need to learn and paper trade first. See if that's going to work for you. If it's not going to work for you, that doesn't mean quit on trading. It just means find the strategy that's going to work best for you. Because that didn't work, that's okay. There's so many other ways to make money in the market, and there's billions of dollars there. So it's okay. Just paper trade first and see if it works for you.
See, and that's, and Stephen and I debate this the whole paper trading thing all the time. And again, I don't disagree with him. One of the biggest things I struggle with when people are new is like, I just don't want you blowing up on some strategy that doesn't work for you, and then you're gone, and then you give up, and maybe you are a penny stock guy, maybe you aren't a penny stock guy, maybe you are a large cap girl, and or options, there's or cryptos or forex or whatever it is. The reason I beg people to paper trade is, at least you're getting the reps in, you're putting the time in, and maybe you start in penny stocks and you blow up 4 paper trading accounts. If you're blowing up real accounts, at some point you're broke or you give up, and then you're gone and you never come back. So that's kind of, now I agree with Stephen that it's, when it comes to you need to ultimately at some point, the rubber needs to meet the road. But if you're a total newbie and you don't even know what your style is, please paper trade,
Yeah, for sure. And I speak from experience too. I had a 6-month-old baby. I had a $6,000 account, and in 6 weeks, bye-bye, all gone. And that's when I turned to paper trading. And it was about at the 9-month mark. So that was February of 2015 that I came to day trading. And by November, after paper trading, it was like, aha, I got it. And then it was slowly positioning up, with comfort levels, being consistent, and then moving forward with larger position size.
Jane, can you say that one more time? It was how many months that you were within the paper trading that you got the clarity?
Right. It was about 9 months.
Okay.
Maybe 8.5, 7.
Yeah. But
really,
you also had a lot of, it's not like you were a complete noob either.
Well, value trading though is very different. That's looking more at the fundamentals, not the technicals. So it took time to learn the technicals of reading a chart. Like pilots are pretty good at it, engineers, nurses that read heartbeats all the time. It's like an EKG, right? You get used to reading something, seeing a pattern. There's a lot of pattern recognition, as you were talking about, Tim, in all sorts of trading. It's not just penny stocks. That pattern recognition, the candlesticks, they do tell a story. And many times that story is driven by volume.
Wow. The book, I loved your book so much because the book is called FMJ, right? Is that how I'll say the title? And this book features only women traders, guys. And I can't even tell you, I read it last night, how inspiring it was to hear the stories of women. And, Stephen and Tim have both been, encouraging me to get going. But there was something that clicked last night, just hearing that, I think you need to see people like yourself, right? You need to see somebody that looks like you, acts like you, before you have a certain level of courage. And so I'm curious, just from this perspective of you being, one of very few in this industry, what do you see that women, what's the edge that women have? Just because I'm a woman, I can't help but ask, like, what's the edge that you think women maybe have in this business that men just don't have? And then we'll talk about men's edge. But I'm just curious because, I'm looking for what I need to get the guts up to go forward. So.
For sure. And Kim, thank you so much, because that's the whole reason why I wrote the book, was because when I was starting out, I was looking for a book like that to inspire me to move forward. And it came from reading Market Wizards and Momo Traders. Those are my inspirations in creating that book, and not finding one about women. So that it's great that you picked up on all of that. And I think for women, it's probably, there's that hesitation in going forward, but at the same time, less risk averse, meaning that we will take that risk management more into consideration and looking at the risk first, which is where all traders need to start from, because any successful trade is going to be looking at that risk management and the trading plan before you get into the trade. You can hear it.
So you're not supposed to start out with how much you're going to make. I thought that was always the first part.
Yeah.
I always thought you just start with it. Well, I could make $1,000 on this, and I'll worry about how much I'll risk later.
Yeah.
When I'm upside down, when I'm sideways or upside down on this trade, then I'll start thinking about risk.
You guys knocking at the door for the rent money.
Exactly. You don't ever want to be in that situation. So if you guys were going on a road trip, right? I like to bring this analogy to it. You're going on a road trip. Maybe the night before, you're going to drive up or down the east or west coast, right? You're going to map out the roads you're going to take. You're probably going to map out your rest area, stops, everything like that. And if you were to do that with your trade, you have your entry, right? But hey, maybe you took the wrong exit. You start going the wrong direction. Well, how long are you going to go on the wrong direction on that road trip before you go, wait a second, I need to go on the right direction? Don't necessarily be stubborn. You don't want to end up in Maine when you're trying to go to Florida, right? That's not good. Maybe you're starting in New York. Like, that's not the best thing.
Now you forgot the first thing Steven does on a road trip is to make sure he's got a case of beer in the trunk.
You need to have your nutrients, your
and
fuel.
ice down so that he can grab
your fuel at your desk. That's important too. Fuel and water.
You're not going to have men, though, identifying for a road trip the rest stops. That is totally the women's who are going to be doing that. The women are going to know where the rest stops are. The guys are going to be like, do we need rest stops? But that is definitely, women have a tendency to be, we do have a tendency to plan a lot. And I think maybe it's just going to come in really handy in this particular.
Yeah, planning is a lot of trading. You need to have that plan before you get into the trade. Know your risk management. How far are you going to let it go before you get out?
Mm-hmm. Mm-hmm.
Yeah, longtime listeners will know that. If you're not watching on YouTube, if you are, you knew I was going to do the thumbs up, because that's, like 135 episodes of this podcast have been me yelling at people to have a plan, so.
And yelling at me to have a plan.
Yeah.
Well.
Steven will probably, Steven's used the podcast like 6 times to get dates. Are any of the women in your book single? He might actually read it then. So
Tim, I have a question for you.
Okay.
As probably one of your few female guests, is there anything different that you see of my description of trading?
Or
Kim? Or Steven?
It's more analytical,
I think, since you asked me, I'll answer first. But in my opinion, no, I don't see anything different, because in my opinion, at the end of the day, if you're consistently profitable, it's all the same stuff. It's thinking about risk management. It's having a plan. It's finding your system. And to me, it's almost like, sex agnostic to me at the end of the day, because it's all the same stuff, and that might not be the answer you want to hear, but to me, it's like, it's all the same stuff. And that's why we feature so many different traders, is I just try and tell people, it's like, hey, This isn't some secret magical sauce. It's just the same stuff. Sticking to your stops, sticking to your system, recognizing what does and doesn't work, and then just doing that over and over again. Like your example of your guy that all he does is trade Tesla. He found out that works. What I see so many people fail is they find something that works. Then they see some guy that shorts low floats or does options, and they're like, oh, I want to do that. And it's all this like the dog and the squirrel thing. So to me, it's all the same stuff, but that's why I think it works for you.
Yeah. Steven,
yeah,
what do
I
you
agree.
think?
It's the trader versus the market. The market doesn't care if you're male or female. Money's all the same, and it's how the market flows.
Yeah, I think the market doesn't see gender. I think it sees weakness and it sees greed.
Ooh, I like that.
That's good. Yeah.
Steven dropping knowledge. I'm gonna steal that one.
Dropping bombs.
No, I like that. Market doesn't see gender; it sees weakness. Ooh.
Good one.
I think I would go 100% with Tim. I think we've interviewed so many guests, and everyone has a niche. Everyone has an edge. Every edge has a 3 or 4 5-step process of the different variables that you go through, and they all need to align, and then you take the trade. And everyone explains it like it's autopilot. But when you hear it, it's kind of something new, and it's some weird system. But then I kind of, after hearing it a few times, I get it. You're looking at the block buys to see what the bigger companies are doing, and then you're piggybacking those moves once you get the direction. I mean, it's as simple as that, right? Yeah.
Exactly. Why go against the billions, right?
Yep.
Why go against the billion? There's the second quote of the podcast. But the only other thing I wanted to say is, the only question I had for you is, it's very easy for us all who've made money in the market now. It's very easy for us to say, oh, this is easy, that's easy, the other thing's easy, but it's quite a hard fact to check that 95% of traders lose, and the vast majority lose. What would you say to someone new who's getting into it? Do you think, how many hours do they need to study? How much dedication? Do they need a specific personality? Can they make it? Should they have blind faith to make it when so many lose? I know it's a lot of questions, but I just want to throw them at you.
Yeah, no, for sure. I mean, honestly, if somebody doesn't have discipline in their life, if they're not super disciplined, trading is probably not the best profession for them. You have to be realistic. In trading, you will face your biggest demons, your biggest fears, and you will find that it comes out with your trades. And you have the ability to improve and make that better. If you journal your trades, you have the data, you see where you went wrong, and you can improve it. If you don't even have the discipline to go ahead and say, hey, these are my trades, and look and reflect back at what you did wrong, there's nobody that's going to be able to help you, because you have to want to learn it and you have to want to get better. If you are going to go ahead and blow up accounts left, right, and center, switching techniques, going low float, going caps, large caps, going options, crypto, forex, it doesn't matter if you're not willing to take that time and be disciplined to learn it. Because if you're not going, you can have that desire, but if you're just going to be a sheep following somebody else, it's not for you. It's going to be much better if you learn it for yourself. And then it's like, what's the saying? You can teach a man how to fish and he'll eat for life, right?
Yeah.
So if you take that time to learn it, hey, you're going to love it. And you have to be passionate about it, because it's not necessarily going to be for everybody, but you have the ability to learn it. You can do anything you set your mind to. I've run 4 different marathons. I pilot. I speak 4 different languages. Like, you can do anything you put your mind to. It's a matter of how badly you want to make it happen.
Yeah, that tracking and that discipline is, again, something we talk about all the time. I mean, yesterday I get this guy. I can't remember I think it might have been Crex or something. He loses on a trade, and he DMs me on Twitter and is like, "Hey, I lost on this trade. Will you tell me what I did wrong?" And I'm like, "Yeah, send me an annotated chart with your entries and your exits and what your thesis was." I never hear from him. It's like, well, dude, what do you want me? What do you want me to do? If you're not even going to take the time to mark up a chart, and it's just like, and just people it's always that easy way out, and they don't want to track their trades. And it's like, there's, I'm losing. Okay, send me a spreadsheet, send me this stuff. And they never do. It's like that they want the fish, but they don't want to learn how to fish, So.
Exactly.
Yeah.
They want to go to the grocery store. They don't want to actually go to the pond and fish it for themselves.
That's good. You're saying that too. Now Tim is the hunter, so he's got a nice couple of refrigerators filled.
Hey, I'm not worried about. Everybody's freaking out about meat shortages, man. I got 13 whitetail in the freezer. I'm not worried about that.
Venison chili. All right, send me some.
Thank you, Jane. This was really an amazing conversation, and I'm just sensitive now to, women, and maybe just finding more women traders to just be inspired by. And I think, were there women out there who encouraged you as you came into it? Were there certain mentors that definitely helped you? I feel like your personality, nothing was going to stop you anyway, right? You had already been courageous enough to become a pilot and to go down a whole nother path of culinary. So I'm kind of curious, though, was there times when you felt a little stuck or worried or any kind of imposter syndrome, like, who am I to do this?
Well, for me, I think it was a matter of, I'm going to do it. Like you said, I'm going to prove it to myself and everybody else that there's no reason why a woman cannot do this. And there's some great women out there. There's even more now. There's Anne Marie Baird. I don't know if you've heard of Mandy Johnny. She's in Australia. She teaches people a lot about performance as well, and helping unlock the blockages in their brains of why they're not moving forward. Hey, what were you doing? There's also Mish Snyder, she's great as well. Stephanie Cameron. There's so many out there now. I've also connected with a bunch of them in hosting an annual webinar, an annual seminar as well. I always like to have 50-50 female and male representation, because there's no reason why there can't be more women out in the public with this. I feel like, maybe sometimes the trolls on the internet can be a little harsh, but you know what? That's okay. If you're going to put yourself out there, it's going to come. If you have haters, that means that they're jealous of something that you did.
That's right. It's an excellent point. Stephen, any other last questions?
No, it was just awesome. It was awesome having you on, because obviously I've been on and off following you for 4 years, and you were pretty much one of the first traders that I kind of saw on Twitter when I was learning, other than Tim Sykes and stuff like that. So it's just nice to meet you after so many years.
Awesome. Well, thank you. Great to meet you.
Really inspiring.
Well, again, I would thank you again, Jane. Again, I missed out on having that conversation with you at Sykes there a couple years ago, and I Googled the book. I haven't read it yet, but I will. I liked the FMJ analogy, which I won't say to censor, but oddly enough, as a big believer in simulation theory, Full Metal Jacket is one of my top 2 favorite movies. Weird. Big Stanley Kubrick fan. But anyway, thank you, Jane. Definitely we'll link, so remember, everyone, if you're listening on iTunes, if you're on YouTube, head over to SteadyTrade.com. We'll link to Jane's book. We'll link to her social media so you can check it out. And, I think, the biggest takeaway, 2 biggest takeaways from Jane, and I wholeheartedly believe, is anyone can do this. Age, sex, race, whatever it is, I think anyone can do this if you're passionate about it and you're diligent and you really, really want it. And if this is your first episode of the podcast, you might not have heard me say this, but you can't be in this for the money. I mean, if you're just like, I want money, it's probably the wrong thing for you. If you're passionate, and you can see Jane light up when she's talking about these block trades and looking at these things and interpreting it. I mean, you feel it, or you hear it. And if that's you, if you love it that much, anyone can do it. You can do it. So thank you again, everyone. Thanks, Jane. Thanks, Stephen. Thanks, Kim. And we'll see you next time on the Steady Trade Podcast.